Imagine working 40 years, saving diligently, dollar cost averaging into the market, only to retire during a lost decade, where your portfolio returns are less than inflation. Sounds dramatic? Well, it's happened before, and it could happen again. That's why I don't follow the traditional investing playbook anymore. For those of you that are new here, my name is Mark Anderson. We run a 0DT hedge fund that runs 18 different 0DT strategies. I'm going to show you how I went from a construction worker to selling over $50 million in 0DT premium and have traded over 500,000 option contracts in 0DT. This video will break down exactly why I shifted my investment philosophy and how you can too. Let's start with one idea here that drives everything I do. Income is the outcome of investing. That's it. That's the entire game. We don't invest to say we beat the market. We invest to create actual income. This simple phrase helps me keep a level head and avoid chasing strategies that are short-lived market beaters. I don't look at the market as my competition. I look at it and only focus on how can I invest so that I gain income. Income is the outcome in investing. That's money we can save, spend, and use today. The traditional approach is cracking. Let's look at what most investors do. They buy index funds, dollar cost into them over time, and hope for a 10% annual return. Sounds great on paper, but in reality, it's a very messy approach. 1 year returns can range from up 47% to minus 39%. You need to be invested for a minimum of 5 years to average that out to have a positive return. That's assuming everything goes right. Heard of the 60/40 portfolio? Stocks and bonds? That used to work because interest rates fell for 40 years in a row. But now, those tailwinds are gone. In 2022, the 60/40 stock and bond portfolio both had negative returns. That's the worst year since the Great Depression outside of 2008. Then there's this. Roughly 1/3 of all S&P gains in the recent decades have come from actual earnings. The other 2/3 are just pure speculation and people paying more for each dollar of profit of those companies in S&P. This is called multiple expansion. Oh, and don't forget about the national debt. With a 6% GDP growth and an 8% deficit spending, we're technically in negative growth territory. And as of the time of this filming, the outlook is potentially much more sobering. Things are not boding well for long-term investors that buy and hold. A better way? 0DT options. This is where 0 days to expirations or 0DT options come in. These options open and expire on the same day. At 9:30, you're in the options, and at 4 p.m., they're expired and you're out. You're in cash, no overnight risk, no sleeping with your portfolio exposed to black swan events, and these aren't some niche product anymore either. 8 years ago, they made up only 5% of the S&P 500 options volume. Today, nearly 50% and growing. Why? Because they offer many benefits. Intraday liquidity. Enter, exit, and manage trades with precision. No overnight exposure. You skip the volatility from after-hours headlines like tariffs. Short-term mean reversion opportunities. You're betting on the day, not the decade. Uncorrelated returns. This is not about stock picking or market timing. Consistent pricing and edge. Implied volatility is almost always overstated. In fact, since 1990, the implied volatility has overshot the reality 87% of the time. That's a huge edge. If you know how to sell premium responsibly, you can extract that profit from the market. Income daily on purpose. This is how I like to think about it. Trading 0DT is like running a business. You sell risk premium, you manage risk, you generate income. It's not about speculation. It's about consistency. And thanks to the law of large numbers, the more trades you place, the more predictable your results become. See my video here on the Shannon's Demon concept that further explains this. Thousands of small daily decisions beat one giant risky bet over time. Warren Buffett says the key to wealth is don't interrupt compounding. I say the key to wealth is daily compounding without interruptions in 0DTE. This is just the beginning. In the next video, I'll walk you through the exact strategy I use to extract that edge from 0DT options, along with how I reduce risk and improve capital efficiency across my entire portfolio. So if you want to see how to manage risk like a professional fund manager and make options trading systematic, subscribe to the channel, like the video, and drop a question in the comments below. I read every single one. Thank you.